Friday Eve, and welcome to Thursday Night Stock Charts Live. We're going to be talking about Netflix earnings. We're going to talk about the Matrix and how the lizard people, how the adults of Davos are kind of breaking down, and it's really, really entertaining to see. We'll talk about some of those headlines. We kind of spoke about it over the weekend on Sunday Night Futures Live. A reminder, please, if you want to join us Sunday night, Thursday night, use that link below, not link below. Use the like button, the subscribe button, the bell button. Get reminded when we go live, and like the channel if I didn't say that. So we're going to talk about Netflix earnings. We're going to talk about our trade in Netflix. We did an earnings trade on Netflix this time last year. Was our first earnings trade of the year, and we got hammered, and it was not a pretty picture. So we traded it again today. Looks like we're going to do very well on this trade. It's not a big trade and very, very wide. It's an options trade. We're going to talk about economic data, housing starts. We're going to talk about the Fed's balance sheet. We're going to talk about the weekly stock charts, and we're going to talk about, again, how the lizard people are falling apart. I have videos to show it. I'm very excited about it. So let's get to it. Let's begin by saying hello. If I can get my mouse to work. Look at this. I am so impressed. Awesome, Jody. Awesome. Now, Jody must have entered the email address. Jody, you're going to appreciate this. She entered the email address, probably got alerted 15 minutes to a half hour prior to us going live. Use the link below. Welcome, Jody. Pete. Hello, Pete. Sean, the man. Trader Isaac. Look at Jody's famous. Jody's always welcome, no matter what time she gets here. And McNeil, it's been a while. How you doing, buddy? Falcon, hey, brother. Okay, let's get to it. Let's share the screen. Thursday night's a pretty quiet night in terms of people checking in. I don't even think I sent this out on social media. So we're just going to jump right in and share the screen. System audio, because we got some video to play. All right. So Netflix came out. They reported earnings, a miss on their earnings. But what do earnings matter? So tomorrow, while you're seeing the shares of Netflix skyrocket higher I shouldn't say skyrocket, that's hyperbolic. They've moved up measurably, about 8% or so, around there. And I tried to short it above 340. It just dumped. So it's inching back up there. I may try to short it even before I may do it live. I may short Netflix live. So Netflix is going to be measurably more expensive tomorrow than when it was before the closing bell today. So beware of that. Don't get lured into the rally. The reason why Netflix is moving up higher is their subscriber growth grew much more than what was expected. You remember this time last year, earnings growth had stalled out. By Q2, they had negative earnings growth. And that's why you had two back-to-back quarters of 2 standard deviation moves, which aren't supposed to happen. A 2 standard deviation move is supposed to happen 4% of the time. It happened back-to-back, 2 quarters back-to-back. I was in on earnings trades both times, hammered. So while we do trade options and we like to be the casino, sometimes the gambler, when you're trading undefined risk, sometimes if you're not worried about your position sizing, the house can have a very, very bad day. So just be forewarned. Position sizing, that's how you really maximize your risk or reduce your risk. So Reed Hastings stepping down as co-CEO. He will become the chairman of the board. So he's certainly still going to have a presence over at Netflix. Now, our trade here was that we sold, I guess this is better. We sold a two-legged Strangle. I should have opened these up. What was it? The 400 call options, 240 put options, but we put on more calls than we did puts just in case we had that real big downward move. I'm more worried about downward moves on earnings than I am about rip your face off rallies because ultimately they'll peter out. Downward moves, they could last a while. So we were a lot more conservative with this position than we were this time last year. Last year's positions were way too big. So these should, even though they expire on the 3rd of February, we will probably close this out tomorrow because we put the strike so far out in the deviation curve, in the probability curve, that they're going to be probably worthless by tomorrow morning or by the close tomorrow. So we'll be out of this. We're not going to be waiting until the 3rd of February to exit the trade. So looks like it's setting up to be a good trade. Let's check out how Netflix is doing the after-hours session. So we closed out the session at $315.78, moved up higher to $345.64. I attempted again to short just above 340, and you can see how it just dumped. And it looks like 340 is going to act as resistance. I'll wait till tomorrow morning if they don't push this up higher. I want to short into resistance. And not that I'm betting on a big move, just a scalp. That's it. We are good. Okay, let's see how the rest of the market is reacting to the news out of Netflix. You're seeing the NASDAQ futures up about a little over 3/4 of a percentage point. The VIX, lower right, I know my head may be in the way. You can see it somewhat. 15-minute view is weak and getting weaker. I'm unable to move this. I know that I get asked this all the time. I am unable to move that picture-on-picture of me, which is one of the other reasons why I canceled this software. So NASDAQ looking good in advance of tomorrow's open. Asia should rally on the news. And if Asia rallies, we're probably going to follow through rally here tomorrow morning. The S&Ps are up as well. Not as much as the NASDAQ, as you might imagine, but good enough for government work. So what we did today is we took some trades off the table. What did we take off the table? I got to remember now. We did a few trades. I forgot what they were. But we made money. We're making money. Tomorrow, our Tesla options expire worthless. Being the banker and not the borrower, we are happy to let them expire worthless because our probabilities of making profits increased dramatically. Let's take a look and see what Tesla is doing in the after-hours session. It closed down $2.92. We went short of Tesla yesterday at on the rally, and we enjoyed that fade off the highs. So far in 2023, we're doing very, very well, whether it's our swing trade portfolio, whether it's our options trading portfolio. It's really been an excellent year so far, knock wood. We, in earnings season, will be reducing risk just as we did with Netflix. And if we could put on a new trade on Netflix tomorrow, taking advantage of whatever price action the market may bring us, well, we'll certainly do that as well. We're opportunists. We love to be capitalists, and we will have some fun with Netflix, ideally, tomorrow. Talon, hey, what's up, brother? Tim, hello, sir. All right, let's get to it. mRNA, that's right. mRNA, we book profits on. We shorted the Qs yesterday, book profits on that. So we did a lot of shorting this week, and it paid off really, really well. So clearly, going into the new trading week on Sunday Night Stock Charts Live, I spoke about the S&P 500 and the triple Qs with regards to, and Jody, I believe, if memory served me, sorry to point, Jody, she had requested a review of the trip cues, and they pretty much did as expected. They rallied up and into resistance and then faded. Now, going back, this is data is worthless to me. Let's clean this up a little bit. This is only going back 8 years. Let's go back as far as 2000. This goes back 23 years. And you could see that the weekly historical price action going back, this is 19 years now, going back 19 years, week 3, week 4, week 5 of the year, it's fairly poor price action. So far, seasonality is living up to expectations. So if we close down this week, the probability of more weakness next week rises somewhat, not dramatically, but somewhat, because the seasonality is following through on past patterns, and there's no reason to believe that we're not going to get more weakness going into the next couple of weeks. The thing to keep in mind is that as you see stocks really get beaten down, and what I really want to point out here, let's bring up, I can't bring up two TrendSpiders. Let's bring up stockcharts.com, and we'll bring the cues up. Clean chart. Let's take all these lines off. Let's clean it up. We don't need any of this stuff. What we're purely looking at right now as we proceed into this time period here, this weakness, that's where our mind is already focused on. I'm looking forward to any downside in the market, because if this is playing out to the downside now, is there any reason right now that I should say, well, we're probably not going to get an upside move later on in the month and in early, actually, this is going to be in February after the Fed meeting. The Fed meets on February the 1st. So what we want to do is say, okay, what we want to do right here, right now, and say, what are we looking for in this market? What is going to get us excited about the market moving into early to late, mid, I should say, February? What we're looking for here is a higher low, simple on the triple Qs, simply a higher low. And then what we're looking for, here, let's even get the candlesticks off. Let's keep it real crisp. We'll just go with open, high, low, close. Where is that candlestick? Okay, real clean. Here is our declining upper band of resistance. One thing I will point out is that the Qs never made it up to 285. Close, but no cigar. That's pretty weak. So what we're looking for is A, do we hold this support level at or around 270? Or B, do we come down here to just above the 260 mark and put in a higher low and then begin to move back up and then threaten to take out this 285 mark? So this is all we're doing right now. Right now, we need to keep in mind the market that we're in. Everybody thinks that this is a downtrending market. In reality, it's not a downtrending market. It is in a consolidation. And how do we know that? Simple. All we need to do is bring up, and what I'm trying to provide right now is context. Context. Where are we right now? Are we in a full-fledged, full-blown bear market? Yeah, but it's paused. So what we want to do is establish our lines in the sand. And all we need to do is take our crayon out. And again, wrong annotation. We have been in this trading range for several months now, going back to, I believe it's June, believe it or not. Yeah. So back here in June, and we have been in a consolidation ever since. Now, what this chart is telling us is that what we have done is that we have not totally given back all the gains from 2020 and on, but we've given up the vast majority of them. So do we break to new lower lows? It's quite possible. Do we break out and move on to new higher highs? Less possible, in my opinion, but it's certainly a possibility that we can't rule out. So we can trade this market, and you're seeing volatility come in now. And when I say volatility, the volatility index is really not doing much. Sometimes it's up with the market, sometimes it's down with the market. There's no clear trend right now. So you could trade this market, and all you need to do is watch 300 on the triple Qs and to the downside around 257. We breach any of those resistance levels and close there on a weekly basis in particular. Don't worry about a daily breakout. That could fail easily. Even a weekly breakout can fail. So, but if we do close on a weekly time frame above or below these support levels and resistance levels, you got to take notice. If you're short, you got to reevaluate whether or not I want to be short this market. If you're long and you break below 267, well, that's a major problem. You're going to have to reconsider that position, because if we do, in fact, break down, we have to evaluate where we're going next. Or if we break out, where are we going next? Here, we'll begin with the positive. We don't have a ton of upside potential. We need to break out above that upper band of resistance. But above that, we can have a nice rip your face off rally, initially up to around 314 and then up to 333. Now, if we break, and this is where the real money can get made, look at this drop. So right now, we're more flirting with the upper band of the declining downtrend channel on a monthly time frame, more so than what we are flirting with the lower band of support on a monthly time frame. So this is why I can't get all relaxed and giddy about the market's getting ready to break out. All I'm seeing here is a consolidation, and we have a rules-based approach. If this, then that. If we break out, okay, we're bullish. Again, we're opportunists, we're capitalists. We don't care what the market does. All we want to do is have it validated that it's breaking in the right direction. And if we disagree with the breakout, well, we're wrong automatically, but maybe the market sometimes gets it wrong. And you have to know why. Why are you bearish on the market when it's going up? And don't fight it, but just get ready to short if you believe that the market has it wrong. And what we're relying upon right now is the yield curve steepening. That's still in our back pocket. Speaking of the yield curve, let's talk a little bit about that. I wasn't going to do it, but guess what? We're going to do it. I didn't do it on Sunday night. I felt bad because usually I lose subscribers when I talk about the yield curve. You know what? It's not about me. It's not about me. So let's talk about the yield curve a little bit here. What's going on with the yield curve? This is updated for today. This was not updated last night, which is why I'm curious. I did not look today. And we gave up some real estate on the yield curve. So no real threat here. I think that this market can rally. Here's my daily chart. The one thing I'll point out about the yield curve is that we are firming up. And I mentioned earlier that we shorted the Qs yesterday, and I booked the profits on it. So what we're doing at current is we're putting in higher lows on the yield curve, and we're just waiting for this breakout. And if we take out the highs of December, then we're probably going to be looking to put longer term shorts on the table, shorting Qs, shorting consumer discretionary. And the one thing I want to point out is this overlaid here in blue is the S&P 500, obviously under a lot of pressure, trading along with the yield curve inverted, whereas gold, highlighted in gold, is clearly outperforming everything. So let's keep an eye on the yield curve. Not much going on here. Nothing scary, but we're beginning to see a firming up and consolidation on the yield curve, setting the stage for a steepening. And once we start to steepen, that's when you got to worry. There's something wrong in the market. The Fed is responding to something, or they're anticipating something is going to occur, and they are pivoting. We know from past shows that you've been on that usually the correction in the stock market, you may think, well, we already had the correction. No, we have not. We have not seen a washout in this market. Remember that the VIX has never, ever, throughout all of this, forget about a daily chart, let's go to a quarterly chart. The VIX has never broken above 40. And each bubble since 2000 has had at a minimum VIX 45 and as high, that was 2000, and a high of VIX 89.53 back during the financial crisis. During COVID, it was 85.47. We have yet to break above 40. There's never been a washout. So let's not get lured into a false sense of security. Tomorrow morning, you're going to wake up. You're going to probably see a bunch of upgrades on Netflix. They go, rah, 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 the bull market's back. The slick back salesman on CNBC are going to be saying, you got to buy this stock market. Forward-looking multiples looking cheap. They're not going to talk about the miss that Netflix had. They'll talk about Reed Hastings, now the chairman. They'll talk about the share buyback. They're not going to talk about the fact that the stock is going to be more expensive tomorrow than it was at the close today. So be careful. Be very, very careful. Don't let them take parking space up in your head. Economic data this week, not good. Not good at all. Retail sales, worse than expected. Retail sales, ex-motor vehicles, worse, far worse than expected. Producer price index, much worse than expected. Industrial production, worse than expected. Initial jobless claims came in worse than expected. Building permits, this is a forward-looking indicator. Remember, building permits you look at, if you're trading the housing market, you want to see building permits higher. It doesn't mean they have to break ground, but it's a forward-looking indicator that permits are being taken out with the intention of building homes, assuming that the economy is still strong, which is not. And what's happening? Housing starts have stalled out. They had a slight beat today, but for the most part, they've stalled out. Tomorrow, existing home sales, that should be interesting. I'm not a believer that there's going to be a huge bubble all over the country for housing. So I'm not buying into that line. In fact, I'm looking for a property down in Florida. So if I see an opportunity down there, I'm going to take it. All right, let's talk about the Matrix. And there's something happened. I started this on Sunday night talking about all of a sudden, all the private documents, secured, what do you call them? Classified documents are being found all over the place. That Biden's own assistants are ratting him out. So he's a rat going down with his ship. So what else is happening out there? Well, on Sunday night, all the private jets started coming into Davos, and all of a sudden things started going real wrong. Initially, I reported on Sunday night that it was reported Klaus Schwab was not going to show up at the World Economic Forum. He then changed his mind because it probably wasn't going to look too good. George Soros backed out. Macron, French President Macron, backed out. A lot of people are backing out. Even Bill Gates, who we'll get to in a moment, backed out. So this lizard person are dead from New Zealand. Just the most horrible people on the face of the earth. Jacinda Ardern has, out of the blue, resigned. So here's what she had to say to the people, and I do not believe that this was her choice. Let's get to it.
And so today I'm announcing that I will not be seeking re-election, and that my term as Prime Minister will conclude no later than the 7th February.
I can listen to that all day long. This person is just a horrible, horrible lizard person. No soul. She's a complete World Economic Forum monster, a dumpster fire, a dump truck of a human being, and she's out. The next one that's going to go, I think, is going to be Justin Trudeau. This soy boy waste, what he did has been revealed. Made an agreement with the World Economic Forum. This is the document here. Digital IDs. I'll share this out. You guys can read this at your own leisure. I'll go to the highlighted text to make this brief. So what this guy did is that he signed away. Here we go. In November 2020, while Canadians were distracted by COVID, the Liberal government signed a World Economic Forum Ignited Charter. The Agile Nations Charter will facilitate agile rulemaking outside of Parliament. The World Economic Forum is a bunch of academics. They are not even real business people. These are academics. And Justin Trudeau signed over rights outside of his own parliament over to, not that he's probably going to get repealed eventually, but probably no time soon. The response provided by Liberal MP Greg Fergus to Lewis indicate the Liberals are knee-deep into handing over sovereignty to the World Economic Forum. I've been coming on here for a long time now, warning about these leftists in the West and how they're selling out to the World Economic Forum because they love the Chinese model, complete control. They want us to eat bugs. They want to eat meat. They're putting the burden of climate change on us while they float around the world. And first they land in Davos on a private jet. Then they take a helicopter 13 miles to Davos. The word digital is seen 49 times in the document provided by Fergus to Lewis. Fergus said the globalist agreement would leverage a digital ID and credentials to facilitate whatever regulatory measures were established. People don't think this stuff is real. It's happening. I don't think it's going to last. I'm a lot more optimistic this week than I have been in the past because people are waking up. Another one. Talk about a faux pas. This is Karine Jean-Pierre, the White House spokesperson, talking about the Vice President, Kamala Harris, and listen for the slip.
This Sunday, the President will speak about the fight to secure women's mental right to reproductive health care in the face of these attacks.
The President, when speaking about Kamala Harris, what's going on in the background? Bill Gates, another lizard person. Check this out.
Take a look. Are you the right messenger on this? Because you fly private planes a lot and you're creating a lot of greenhouse gases yourself.
Yeah, I probably have one of the highest greenhouse gas footprints of anyone on the planet. You know, my
kind of
personal flying alone is gigantic. Now, I'm spending quite a bit to buy aviation fuel that was made with plants. You know, I switched to an electric car. I've used solar panels. I'm paying a company that actually, at a very high price, can pull a bit of carbon out of the air and stick it underground. And so I'm offsetting my personal emissions.
Don't. Okay. You can't make this stuff up. They're falling apart. Last one, I promise. Here's good old Al Gore.
We're still putting 162 million tons into it every single day. And the accumulated amount is now trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every single day on the Earth. That's what's boiling the oceans, creating these atmospheric rivers and the rain bombs and sucking the moisture out of the land and creating the droughts and melting the ice and raising the sea level and causing these waves of climate refugees predicted to reach 1 billion in this century. Look at the xenophobia and political authoritarian trends that have come from just a few million refugees. What about a billion?
I mean, the only political authoritarian is out of the World Economic Forum and these losers. And what he just said, 600,000 Hiroshima bombs going off each day, boiling the oceans, raising the sea levels. Every one of these people has multiple homes on an island, on a beachfront. They have no problem buying those properties. But yet they want to infringe upon your right to have a gas stove now. Watch out for these people. I bring this up because it's a matter of having your dignity and your human rights here as an American. So don't let them take your rights away. Please speak up. Be aware of what's going on because they do react once there's a saying that sunlight is the best disinfectant. These lizard people are really responsive to and very sensitive to any type of ridicule, which is why they're trying to clamp down on free speech. They do not want us talking about them. That's their worst fear. Let's go to some comments. I get the impression that vaccines were supposed to work and at least not cause harm. Now there's a panic. Correct. And there was, it's too long, but there's a great video out of Rebel News. If you type in Rebel News, it's a Canadian news organization. They have affiliates down in Australia. And they caught the CEO of Pfizer, that piece of human lizard waste, outside of Davos. And they nailed this guy 6 away from Sunday with outstanding off-the-cuff questions. They were in shock they got this guy alone for 2 minutes. 2 minutes walking, and he would not answer a question. Not one single question, because he's so used to softball questions. They must be scripted and approved. These guys got him. Go over to Rebel News. They rely upon funding. So think about donating to them. They're really good people. They do God's work up there. So the Canadian Broadcasting Company is what it sounds. It's government funded. Obviously, Justin Trudeau biased, but certainly Rebel News. Check them out. Really, really good guys. You have Yavi Yemeni down in Australia as well. A really good guy, part of Rebel News. Jody, when I was 15, Al Gore said New York City and Miami would be, yeah, they put out the move. Right, Jody. Yeah. It's amazing. It's absolutely amazing. I think he just paid, he just is paid by nuclear power to make all this up and complete. Well, yeah, when he had after he was done being vice president, he started a news network, and it wasn't making any money, so he looked to sell it. And who did he sell it to? The country of Qatar. I think it was Al Jazeera, which is backed by the country of Qatar, and they're like the second largest exporter of oil out of the Middle East. And he refused to sell it to the other guy. What's his name? Conservative guy, Glenn Beck. He refused to sell it to him, but he did sell out to the people that were boiling the oceans. You can't make this stuff up. Lizard people. All right, Fed's balance sheet. I was surprised to see this. I had expected them to not be as aggressive this past week with reducing the size of their balance sheet. It looks like they stepped it up a little bit here. So again, I'm happy to see this, but it should also make you worried about the markets and how it's going to handle a spike in yields. But right now, let's face it, we're going to go to the chart of yields. How much time do we have? Yeah, we have time. We're going to go to the chart of yields in a moment because they're dropping. And that's a good thing. It's allowing the Federal Reserve to roll off debt off their balance sheet. Let's go to the weekly price action. We're going to go over some weekly charts now. And what we do here is that we go over the weekly charts on a Thursday because we're not thinking about tomorrow per se. We're thinking now on a Thursday night, as we do each Thursday night. If you're not subscribed to the channel, please do so. Click the notification bell. If you want to get alerted 15 minutes to a half hour prior to us going live, enter your email address below and get alerted when we go live in advance. So what we're setting up for is next week. How do we want to be positioned when we close out our trades on supposedly Netflix tomorrow? We raise capital. We have to redeploy that capital. We have to keep churning that capital. We're always going to keep a large liquidity balance to take advantage of opportunities. Or in the case of Netflix, one of the things that saved us, and this is really a good story to tell, twice last year, because I talk about our losing trades as frequently, if not more, than our winning trades, because you learn from your losers. You don't learn from your winners. Your winners are just an outlaw. They're a dividend paid off by your losing trades. So you're getting paid for losing experiences. So I've been preaching about how we were going into the new year, raising capital. And we sold Amazon. We sold most of our longs. And we had profits. Coinbase, we made 42% on. And all that capital. And what if Netflix would have gone against us? We had undefined risk and it dropped $200. What if I was maxed out on my leverage and I didn't have a lot of capital? I'd have to cover that position and take a loss. I wouldn't be able to carry it. I wouldn't be able to roll down calls. I wouldn't be able to put on strategies to put on a collar to minimize the risk after the bomb hit. That's why if you're going to do earnings trades in particular, that's a binary event, always have at least 50% of your capital in cash reserves. If you're overexposed, if you are trading earnings and you are trading measurable positions, 5%, 10% of your account, I really hope that you have 50% of your net liquidity, not your buying power, because that will be reduced the following day, but your net liquidity. Do you have that in reserve to manage your losers? Think about it. And that's how you survive. I did it in Q1 of last year, Netflix. Q2, again, Netflix. What did I have? Capital reserves. How do we finish off the year? Strong. But if I didn't have those capital reserves, mushroom cloud. All right, let's get to it. As we always do, we want to talk about bond yields, the bond market. The bond market is the tail that wags the stock market dog. We never forget that. We repeat that constantly because we never do want to forget it. I know a lot of you are out there saying, you know what, bonds, who cares about bonds? Bonds, the bond market is exponentially bigger than the stock market. As goes the bond market, can go inversely the stock market. And right now we are trading right at the lower band of a bull flag setup on yields, not the bond price, but the yield, 10-year yield. And the stochastics are weak. This may break. So something to really keep an eye on here. And you would think that with all the rate hikes and with the okay earnings out of the banks, that you would see bond yields move up higher. They're not. Why? It's because, as I've been saying since Q2, the end of Q2, actually Q3, the beginning of Q3, we are in recession. They changed the definition of recession. The mainstream media adopted the new narrative, the new definition of recession. We did not. We have been in recession. We've been steadfast. the institutions, the media will not admit that we are in recession, despite the fact that's the way you've defined recession, 2 back-to-back quarters of negative GDP forever. They completely ignored history. And now they're looking foolish because the economy is falling apart. Bond prices catching a bid. Strong day yesterday, a bit of a pullback today, but still, this is a bullish setup. All down days are not made equal. Your moving averages are moving in the right direction. They are rising relative to the flattening out 200-day moving average. Just go off to new 52-week highs anytime soon? Probably not, but it certainly can be traded. So the TLT, the bond market, is looking pretty good. The chip market had an outstanding day today. Really, really good. They are up. So what is this telling us? Why do you buy tips? You buy tips to protect your portfolio against inflation. There's only a problem with that. And you had data come out yesterday indicating that we were getting deflation in the economy. It's really disinflation. Inflation is still there. They're going to want to throw out the word deflation to make you think that prices aren't going up as much as they are. Yes, the rate of growth has slowed. That does not mean that they will not resume. What will cause those prices to resume? Oil, energy in general. Stocks going back up is inflationary. So watch the tip market, watch energy, because this is the tip market saying, man, if the Fed pivots and the CPI is not back down with a 2 or 3 handle or a 4 handle, they're not going to be able to fight inflation. Inflation is going to come ripping back because what's going to happen when they pivot? The US dollar is going to tank. Forget about a weekly chart. This is a daily chart, not even a weekly chart. Let's go to a monthly chart. Look at this disaster area that is the US dollar. It's trying to hold on to 27.50 on the dollar bull ETF. But if this continues, this in and of itself is inflationary. Remember, we don't produce things here anymore, except for military goods and other industrial items, Caterpillar and whatnot, and airplanes. But most things that the consumer uses are imported from Asia. So if the dollar is in decline and foreign currencies are going up, that's inflationary. So that's why we're buying emerging markets. We'll go to a chart of that in a moment. We're taking our money out of the United States, putting it into emerging markets, putting it into gold, silver as our core investments. The VIX, Volatility Index. We had a bearish breakdown last week. Is this a retest of the breakdown point? Yes. Do we recapture it? We don't know until the end of business tomorrow. I suspect that tomorrow morning we're going to wake up, bright green futures. Take a breath. You're not missing out. There's no FOMO here. Wait and see. Does the stock market hold on to the gains of the morning? If so, okay. In all probability, if by 10:30 the market hasn't given up all those gains, in all probability, it's going to close up on the day. Those are your probabilities. Unless you're a day trader, that first hour, you shouldn't be trading whatsoever. You should be sitting back saying, okay, we're up. Let's take a breath. Let me go for my 5th cup of coffee and relax a little bit and wait and see how the first hour of trade plays out. If we simmer down, we hold on to gains. You see a good setup intraday, take it. Or if you're looking to put on a long trade going into next week, wait and see how we close out the day. Put on your long trades in the final hour of trade. That way you avoid a washout in the final hour of trade, which I've seen way too many times. Let's go to some comments. Remember, everyone to resist using your gas stove for 2 weeks to flatten. Yeah. Tom. Hey, Tom. Hi, Bob. Anyone invested in VMSXF may see the light at the end of the tunnel. A VMS commodity play hit copper 10%. Okay, we'll take a look at it. I'm not familiar with it. Maybe somebody else is in the audience. Okay. All right. Let's move on. the Dow transports, our canary in the coal mine for the stock market. Not a bad day today. As a matter of fact, I pulled up the wrong charts. These are not my weekly charts. This is a weekly chart. So weekly chart, bearish reversal bar on the week so far. We really need to see a recapture of, let's call it 14,212 by the end of business tomorrow, because this would be a breakdown. Not looking good on a weekly time frame. Daily time frame looks a little bit better. Yes, we were down on the session, but we did recapture a support level. We're going to need to see a little bit of strength. We're going to need to see an inside day tomorrow. The Dow Jones, I pulled up the wrong charts. Weekly chart, rough week. One trading day left to go. Maybe we'll rally back. We'll close at the highs of the week tomorrow. I don't know. But it's not probable. And that's what we do here. We trade the probabilities, not the possibilities. The weekly chart is not looking good. One thing I will say is down volume is very, very light. Not a lot of institutional pressure. The S&P 500 daily chart, we broke back down below the 200-day, the 50-day moving average, and we're probably going to kiss the 20-day tomorrow. Volume rose today on the S&Ps. How are we looking on a weekly time frame? Outside week, this is nearly a bullish engulfing bar or bearish engulfing bar. So it could be something, it could be nothing. Not a lot of selling pressure. But again, this is a 3-day weekend. We already did the triple Qs. I'm going to pass over those. Let's move on to energy. Now, energy is a sector that we're watching very, very closely, because what happened yesterday was pretty significant. We had shorted energy twice. We booked our profits right here on January the 4th, and the shares took off. And yesterday, they broke down. And today, you had a reversal bar. But the question is, what is oil doing? Because energy is going to follow oil. And oil, which was, this is a weekly chart, oil, which was down on the week as of last night, is now positive yet again. Daily chart, there's a very high correlation between oil and the energy stocks. And oil caught a bid again today. Keep in mind, it's inflationary. Let's take a quick peek at gold. Gold had a real sneaky rally today. Let's first take a look at the weekly chart. Try that again, Bob. Let's first take a look at a weekly chart. Okay. Try that again. There we go. All right, so gold, really nice chart. Gold on the week, it broke out last week. What it's doing this week is that it retested what was resistance on or at or around 1900. Just around it. It held this week so far. One trading day left to go. Maybe it'll give it up tomorrow, but I doubt it. This chart is looking very, very strong. Volume is light, but again, abbreviated week. Daily view. Good view. Good chart. Volume was okay, about average. So right now we have a market that's under pressure. We are closer to resistance on a weekly and monthly time frame than where we are relative to support. We are in a 6-month trading range. We are not in a strongly downtrending market, and certainly not in a strong uptrending market. What we want to keep an eye on are the lower band of support on these monthly charts, because if we start breaking down below 6-month lows, there's a saying, the longer the consolidation, the greater the validation of a breakout or a breakdown. So in short, when you get a 6-month consolidation, If it gets resolved to the downside, it's probably going to be a pretty bloody sell-off. If it gets resolved to the upside, it's going to be a rip your face off rally. So let's just be careful. Let's do some chart requests and call it a night. All right, let's see what we got. Boyle for Jody. We opened up a call spread on Boyle today because I think that we're probing the bottom on Boyle. I didn't like the close. The weekly chart, we're developing it's hard to see in blue, but we're developing a VWAP. Folks, we're using TrendSpider, 35% discount code below. Automated technical analysis. So we're probing a bottom here. Now, when I'll get really excited about Boyle is when these Stokes begin to break out. They're not doing that yet. If we rally, the first resistance level is probably going to be up to around $16 per share. Daily view. And here's the value of the automated trend lines. I'm going to take them off for those not familiar. Now I'm going to put them back on. I didn't draw these lines. This is the AI that does it. So we broke down below this lower band of support in blue. Then here on the 12th, we recaptured that support level. Now we're consolidating and we're in the apex of a descending wedge formation. So I think that this gets resolved to the upside on Boyle, given the ruthless sell-off that we've seen over the past several months. Tim, NVIDIA. Okay, so with names like NVIDIA, you have to worry about earnings that are coming up. And again, I think they report next month, I believe. They're one of the companies that reports later in the earnings cycle. So we have a breakout above these lines that you're looking at here are fractal trend lines, or also known as Keltner channels, a hybrid on the Keltner channel. And we broke out last week. This week, a bearish reversal bar. I think we could easily come back in and retest 150. One strategy to employ here, if you're bullish on the market, is to sell a 150 put and have the shares put to you rather than buying them right here, right now, if they're assigned to you. So the worst case is, if you're bullish on the stock, is that you have the shares put to you or you collect a premium. So that's one way of trading it. So I'm not seeing a compelling reason to go buying right here, right now. I'm loving the Stokes gaining momentum. Daily view. We hit the upper band of resistance or came close to it. Now we're probably going to retrace back down. Again, 150 to 154, interesting support levels. That's where I would begin looking to open up bullish positions. If I were going to sell puts, I'd do it down here at the 150 strike, 145 strike, if you really want to stay conservative. But I wouldn't buy just yet. We're trying to put in a higher low. Let's see where they land. They're going to retest one of these support levels. Again, looking at 154, 150, then 145 as support levels. CMRE. Costamar. All right, a good looking chart here. We've broken out of a long-term downtrend, consolidated. We're above the 20-period moving average in yellow. Last week was the first week above that resistance level since April of 22. So this is a good-looking chart. Your momentum indicators, stochastics are rising, daily view. The shares are in an uptrend. I think this is a buy on a close above $10 a share. I would have no problem with nibbling here right now. You want to scratch the itch, as I like to call it, scratch the itch, and look to add more on a close above $10 a share. Nice round number. That's the play here. You're welcome, Tim. BMY, Bristol Myers Squibb for Paul. Interesting. Let's go to a monthly first. Okay. So the shares look good. We're consolidating. What happened here is that we had broken out, strong uptrend. We kept tapping this upper band of resistance, and then ultimately we're rejected up there, which is, what the heck was that noise? That was not me this time. Usually that is me. We got rejected. We're holding support. I know what they're doing is this. They're retesting the very peak of this breakout point at around $70 a share. My only concern with Bristol Myers monthly time frame is that you're beginning to lose some momentum, but that happens sometimes when you are in a consolidation range. This is not let me do this. Forget it. Abandon that. So let's go back to the weekly chart now that I have more information. I think this is a no-brain buy right now. It's a tight stop loss just below last week's lows, because if that goes, we're coming down here to around $69 a share. Not that far away. But I think this is a buy along the support level. We should trade back to around 83 per share, daily view. Yeah, it's already started to kick up. Here's your uptrend line. It's breaking out. It's going up higher. Broke out today. Game on. BMY long. LHX. L3. Oh, I haven't looked at L3 Harris Technologies in years. So this is becoming a buy very quickly. I don't like the chart, but I like the support levels where we're headed. This is a monthly chart, and the algorithms are picking off support right below. Support level number 1, 187.15. Right after that is 185.50 on L3 Harris Technologies. Stokes are weak and getting weaker. So no great rush here. That's where we're going. We'll probably overshoot to the downside. Weekly chart, we have broken down below the lower band of this descending wedge formation. That's pretty bearish stuff, but I think this is capitulation. Usually when you get this is capitulation. They even did it last week, but they rallied it back. My guess is I think there's a very good chance you get a rally in the stock tomorrow and recapture 195.50, give or take a dime. Daily chart, a little bit weak. We have resistance above. It's probably going to need to gap up. So we know the monthly support levels. There's no compelling reason right now to go jumping in tomorrow and buying the shares. Wait until they hit those monthly support levels. You have resistance immediately above. We broke down yesterday. They rallied it today. We were rejected, which means that in all probability, we're going to go lower tomorrow. So no rush here, but it's setting up nicely. With that, folks, everybody have an awesome evening. Don't forget to like, subscribe, and have a profitable trading day tomorrow. Thank you for being here. Smash the like, subscribe button, and I will talk to you on Sunday night. Members, I'll talk to you tomorrow and Saturday and Sunday and every other day we pretty much talk. Be well. Have a great night. Out.